Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I want to talk about another major lender has increased rates on residential and buy-to-lets, and one of those is a significant rate increase. This video, I'm going to tell you about why this is all happening at the moment. Could we expect other lenders to increase? And what can you do to protect yourself? Because right now, there's a lot of uncertainty in the market, and it's vital if you're looking for a mortgage or looking to buy a property that you get the best rate possible. So we'll talk about how you can do that and maybe protect your family and get yourself the best deal on the market right now. So if you're new around here and you haven't done already, do subscribe to the channel over here and hit the bell notification. We're nearly at 3,000 subscribers just this month. So thanks to everyone that subscribes. Let's get this video pushed out so more people know what's happening in the market. How can we do that? Smash like, tickle like, do something to that like button, guys. That helps so much with the YouTube algorithm, and that's what pushes it out to more people. So thanks to everyone for taking a minute to do that. So what is going on? Well, we've had uncertainty recently. Yesterday, unless you were under a rock, you saw that Donald Trump was now inaugurated as the new president. And actually, that might start to settle things down, because we had the threats before he came in of tariffs and all these things. And over the next few days, we'll actually know, is that going to happen, or was it bluster and negotiating? Because markets want to know what's going to happen. It could be good news or bad news. Uncertainty is actually a worse thing to have. And so because of uncertainty recently, rates have been increasing. And what we're talking about here is the rate that your bank borrows at. So maybe you borrow from HSBC or NatWest or Barclays or somebody like that. They borrow from a bigger bank on a rate that's called the SONIA swap rate. SONIA swap. And so these have been rising over the last few weeks, and they've been rising fairly rapidly, and that's meant that the bank that we borrow from has had to push that on to us. So far this year, we're only a little bit into the year, but we've had increases from Santander, we've had increases from HSBC, TSB, and Leeds Building Society. So a number of big lenders here. And today, another lender has decided to join them, and that is Barclays. Now, Barclays in 2024 were competitive on mortgages. So when you see a lender like this increase stuff, and you know that they've been competitive, it has more of an impact. And that's not great. And I don't want that for anybody. So what are they doing? Well, they're increasing all of their residential mortgages by at least 0.2%, which isn't insignificant. And that will make affordability a little harder for people applying with them currently. And it will also mean that just costs go up generally for everyone, which isn't good. But who's been hit harder here is landlords again. And so buy-to-let mortgages with them are going up by 0.45%, nearly 0.5% there. That means maybe they're trying to push away. Maybe they don't want so much buy-to-let stuff in the portfolio at the moment because of all the uncertainty that landlords are facing with EPCs, with the Renters' Rights Bill. You might see, we have to see what happens over the next few weeks and months, but we might see lenders making a bit more margin on buy-to-let landlords because they want to be certain that they're going to make a profit and not get stuck with a load of dud deals. So a 0.5% nearly increase on a buy-to-let landlord when a landlord pays interest only is going to be really, really impactful and hit them quite hard. So what can you do to protect yourself from this? Well, with some lenders, you've got the opportunity to pick a new rate up to 6 months ahead of time. That came into effect when the government saw that the interest rates were rising. They went to the banks and said, look, let people swap early. if they know they've got their mortgage coming up, let them swap early. And so you were able to swap, and you still can with a lot of lenders, 6 months early. So what you do is you go to a broker, you start looking for deals, and you get your application in early. Or you go to your existing lender and you speak about transferring onto a better rate. Now, what that does is it gives you today's rate. So whatever they are right now, 4.5% is a quite common rate, 5% as well. You can fix that rate right now. Then, if the rates continue to go up during that 6 months period when you're waiting for this to go through, then you are protected. You've got your worst case scenario in that type of deal. But if rates drop, let's just say the Bank of England start cutting rates, unemployment goes crazy, so the economy is crashing and rates are dropping really, really fast, you can then swap, because you didn't start that new deal, onto that better deal. Now, a lot of lenders, as I said, will let you do this 6 months early, but some are changing that policy to 90 days. So you've got to look around and see what your lender has. But in this market, when you've got some uncertainty, when you've got rates sneaking back up, they're not like surging ahead, but they are going up significantly, and they could mean affordability is difficult for some people watching this video. I think it's best to get prepared as early as you can and make sure you get the best rate possible. Now, what are the outlooks for the rest of the year? Well, the expectation is that the Bank of England will still cut rates. The Bank of England came out in December. The markets were saying at that time the bank would cut 2 times in 2025. The bank said we'll be cutting 4 times. So that's interesting to see if that happens. The markets expect the Bank of England won't cut 4 times, but I'll tell you why they could and why that might just happen. You see, the Americans are expected to cut 2 times as well. They're indicating that that's what their expectations are for 2025. But they are ahead in their rate cutting over us. They are 0.5 percentage point further forward. So even if the Americans cut twice, we could still cut 4 times and still have a rate that's fairly close or exactly matches what they've got. And the Bank of England do like to follow the Fed. We like to have our currencies fairly intertwined and really, really close to each other. So that's something to keep an eye on. I do think, though, over the next few days, you could start to see other smaller lenders increasing rates. I don't think you're going to see a rate crash or like the lenders putting rates down significantly until maybe the spring or the summer. So that gives you an idea on timelines. If you're looking to remortgage right now, you're not going to see any major cuts, in my opinion. That could change, though, if we get some bad economic data. But the government got bailed out pretty much because the November data was slightly up. And so it was slightly positive for them, which maybe delays a recession. Let me know what you think of all these lenders increasing rates. What would you do? What's your plans with your remortgages or purchases at the moment? Do comment below, even if it's just to say hi. Do subscribe if you haven't done already, and check out all the other content on my channel, including this video right here.